Hello, welcome to today's live. My camera is shaking a bit. Let's get everything steady. All right, awesome. Welcome to today's live. I am Ronica Brown and I help my clients to implement tax saving strategies, and these strategies are specifically designed to help them to lower their taxes, keep more money in their pocket, and pay less to the IRS. So for today, I'm posting specifically about business owners who are ready to acquire commercial real estate for their business. So they're ready to buy a building to host their business in, or ready to buy a building to rent their business in. So based on your location, it doesn't matter what this building, not business, it doesn't matter what this building looks like. It can be, it can look like a residential property as long as the zoning is correct. When you're closing, they will take care of all of that. But anyway, so why this is important, because you see a lot of professionals, once income start increasing, they want to take that next investment step, and, real estate is a great investment. And from my view, thanks Lisa, from a CPA's view, it gives you amazing tax savings. So you always want to, take a look at this, even if you don't want to go acquire other type of real estate. So this post is specifically, as I said, for people who are looking to buy some form of property where they're going to rent it to their operating business. You see a lot of attorneys do this, a lot of medical professionals, medical doctors, dentists, so forth. They'll do this. CPAs does it a lot. Coaches and consultants can do it too, because the thing is, it really doesn't matter, if most of the times you're working from home or not. It doesn't really matter. What matter is you have a business you have an operating business that is profitable, and that you're able to form a next company, be able to move money from one business to the next, and be able to acquire a loan to buy this property. And the next reason why I think this is important, because a lot of people, when they're about to do this, they wait until it's too late to contact their tax professional, because a lot of times the tax planning can start during the process of you acquiring the property. And this is the reason why, because sometimes just a little tweak in the price of the property can guarantee you zero taxes the year after you acquire the property and the next year. So before you go ahead and sign off at closing, before you go ahead and complete your loan process and decide on your property, run the numbers to see how much of a tax deduction you're going to get in the first few years of the buildings. I'm going to talk about some strategies that you can definitely implement that's going to 3 times the amount of savings that you can get. And what I mean 3 times, for example, say for instance you buy a property that's worth say $500,000. What we would focus on is help you to get so 3 times that was like 1.5 million worth of deduction. So that's 3 times what you pay for it. And those are some of the things that you have to think about, so you have to know about, so that when you're ready to take this step, you have the right information in order to make the right decision on the right property, as well as how much you're paying on the property. So what we want to focus on to make sure that, once, your operating company, that the savings from this property will be able to offset the income that your operating company is making. So that's basically, tax-free money for the first year after you acquire the property, and couple years after. So say for instance, you went ahead, you acquired a property, you get this amazing write-off. What are some other ways that you can 3 times this savings? And some things that, will come up is, ask for, a cost segregation study. And this is one way how you can basically write off a lot of the things faster. So I know that down payment on property, because it would qualify as a commercial property, and a lot of times loan officers there, you're gonna have to make a down payment unless you can find a loan officer that will be able to fund the transaction with a reduced down payment. But how you can recoup your down payment is from the tax savings you'll be making the next year and the years 1 and 2 after you basically purchase the property. So that's one thing to think about. In order to do a cost segregation study, the building that you buy has to be on the higher price tier. So that's why you want to be able to run the numbers, see all the amazing savings that you're getting before you buy the building, so that you can 3 times your saving. The next thing that you're going to want to do after you finish your cost segregation study and you get all this amazing savings is down the road. There's an awesome thing that you can do, charitable LLC, where you can use this building, get a big write-off for charitable purposes, and still have access and use this building. So those are 2 ways to get more deduction from the property. But I can guarantee you, definitely coming back to this after lunch. Thanks, Michael. But I can guarantee you that there are other ways on how you can package your property so that you can get more deduction than what you paid for the property. A lot of time you're just limited to what you paid for the property. If you buy a property for $500,000, a lot of your deduction you're limited to that $500,000. But what we're talking about is ways to get $1.5 million worth of deduction. You're not gonna get it all in year 1, but over time of owning that property, you'll be able to qualify for a lot of this program if you're strategic in what type of property you are buying and how much you're paying for the property up front. As I said, once you run the numbers before you acquire the property, once you see the savings, you can see how, even though you have to put a lot more upfront in year 1, you can see how you can recoup it in paying 0 tax. Again, I'm not kidding. Paying 0 taxes after you acquire the property for maybe 1 or 2 years. And I'm talking about, people, you don't have to be making 5-6 million in order to do this. You can, once you're able to qualify and say, acquire a property with, acquisition costs, say $500,000, then you will be in the category that will also benefit from this type of saving. But anyways, this is it for today. What my recommendations are for today: speak to a professional before you go get yourself in trouble. I know that a lot of people like to be jack of all trades and go and Google recommendations and then get themselves in trouble. So if this strategy works for you, I have a link below that you can schedule a consultation. This is not for anyone that's doing residential real estate, fixing and flipping rental property. This is strictly for people who wants to buy a building or a office building and have their business rented from them, or have other business rent it. And as I mentioned, it doesn't really matter if you're working from home or if you still plan to work from home after you acquire. You just need to have the cash and know how to spend it. But anyways, that's it for today. I am Ronica, and again, if you don't have a tax savings plan, then you are overpaying on your taxes. Let me know if you have any questions. Comment below. Take care.